Morning guys, I'm Richard, Head of Trading here at Corporate to Retail. As many of you know, my background is institutional, banks, fund managers, hedge funds, brokers, etc. So I'm fairly new to the retail space, and one thing that has surprised me since I've got involved with the retail side of the market is how many retail traders out there think that the only thing that matters is their particular chart and nothing else is important. And I think over the last year and a half, it's been a crazy period with COVID, with Brexit, with the US elections. I think if it's taught us anything, is that there's a lot more going on out there that affects the currency markets than your individual chart. There are correlations all over the place, and even this week we have seen big moves in the markets, and it's not down to your Fibonacci levels being breached, your RSIs being overdone, your moving averages. It's because of what's going on in the world. I've been talking now for a month or so about the massive rise in yields. The US 10-year was up from 0.9 to 1.75. That's nearly doubled. Seen a big rally in the dollar on the back of this. This week we've seen the price of oil down 10%. Gold was up at 2,100 a few months back. It's now down at 1,650. Everything ties in together. Now, it's not easy learning these correlations, learning what affects what. Equities getting killed. What's going on in the Nasdaq, what's going on in the Dow. It all rolls into one. The FX world is full of arrogance. Everyone thinks they're the best. Everyone thinks that what they do, what they know, is the most important. And being an ex-bank trader, you learn that it's like a big pie, and as many pieces. If you can have as many pieces as possible, the better you're going to be. I don't claim to know everything, but I know a little bit of this, a little bit of that, a little bit of this. Put it all together to come up with my trading ideas. So you've only got to look at, I just mentioned oil. Oil's gone from $66 down to $60 in the last 48 hours. Dollar Canada has gone from 123 up to 125. Why is that? Because oil has gone down, which is bad for the Canadian economy. Canada gets hit, dollar goes up. So it's not complicated, but you need to understand that relationship is there. The US 10-year, everyone's talking about it at the moment. Like I say, it's a massive rally from 0.9 up to 1.75. The world is buying dollars on the back of that. So when this started maybe a month ago, euro dollar was up at 123. It then went down to 118. So euro's gone down, the dollar's gone up. Sterling dollar was up at 143, went down to 138. Sterling goes down, the dollar goes up. We've seen dollar yen, big relationship between the yield play. That was down at 106, something like that, 106, 109.50. We was up to close to yesterday, I think. It's all connected. If you're trading Canadian dollar, Australian dollar, New Zealand dollar, you have to watch the other. They all move together. If you get yourself a chart and you put Aussie dollar, New Zealand dollar, and then the dollar CAD, you will see that relationship there. Obviously the dollar CAD moves the opposite to the New Zealand dollar because the dollar is the base. But learn to watch these patterns. The price of gold, it's following euro dollar. Gold was up at 2,000, euro dollar was up at 123. Gold's now down at 1,700, euro dollar's down at 118. So it's a dollar market at the moment. So spend time looking at these relationships. Don't believe that your chart is the only thing that matters. Yes, it helps, it gives you an idea for levels, but it's not going to dictate what the price action is. It gives you levels, it gives you ideas, it gives you an idea for a stop loss, breakout levels, etc. But it's the overall market. The world is a big place and there's a lot going on at the moment. So make sure you try and learn to follow those other majors. If you're trading sterling, sterling yen, sterling Aussie, sterling Swiss, you've got to learn to watch sterling dollar. That is what dominates. Sterling yen moves 300 pips. That is because sterling dollar has been bought, not because sterling yen has been bought. The rate might be higher, but it's just a byproduct of sterling dollar. So try and learn these. It's not easy. It takes time, but try and learn to watch these majors. Try and learn to watch. If you trade Canada, you've got to watch the price of oil. Try and watch the price of gold. This US 10-year. I've been talking about it for a month now. It's important. It is ruling the FX worlds at the moment. So a little bit heavy. I hope that's not too complicated. It takes time, but try and get into the habit of looking at these other bits and pieces. Don't just sit there staring at your chart. Have a good day trading, and I will speak.